Okay, so let's continue while we wait for others to join us. We are looking at this very wonderful illustration, seamless and simple. Ganusi enters into a lease contract with Alpha PSC. The following information is relevant for references and consideration. Ganusi Limited must pay 5 annual rentals of 100,000 in arrears and in advance. Ganusi Limited must also guarantee the residual value of the asset at the end of the lease term to be 40,000. Ganusi Limited incurs initial direct cost of 5,000. The interest rate implicit is 8%. Now, I was explaining certain things earlier. I told you, once you see this kind of question, the first that should come to your mind is this: what am I going to do? Step 1. Once you see and note that this is what the question is asking to do, determine first what we call the right of use asset. Even required in this requirement, we were told to determine. We are told to determine the right of use assets. Now, I was explaining something the other time, and if that is the only thing I achieve tonight, I'm okay. Number 1, lease payment can be in arrears, lease payment can be in advance. If it is in arrears, it means that the lease payment will be made at the end of the year. If the lease payment is made in advance, it means that it is made at the beginning of the year. Now understand this: once the lease payment is made in advance, that amount that is paid is not a future cash flow that you are expecting. Therefore, you don't discount it. In other words, look at this question. If we are picking that the lease payment is made in advance, look at this question now. If we assume that the lease payment is in advance, it simply means that this 100,000 naira the first year have been paid. If we are going to determine our lease liability, we are only going to consider the 100,000 that is remaining for the next 4 years. How that is understood. That is what we are going to consider. So if we are discounting, we are only going to discount for 4 years and not 5 years. Now, if the lease contract is in arrears, it simply means that we are going to discount for 5 years. Why? Because we have not made any payment, and then we are expected to make what we call future cash outflows. And then we have to discount it, because this future cash outflow is something that is going out of us. It is a liability to us. So we need to discount it into today's present value, the time value of money. We will discount into today's present value, and that is what we are going to carry in our book. It's as simple as that. So let's really go through the solution. I've done some part of the solution so that we can have a seamless class. I told you earlier, I said the step 1, when you are determining the right of use asset, is to determine the lease liability. If you remember, I said your right of use asset comprises of the lease liability, direct costs less incentives, plus any cost of dismantling, future cost of dismantling or bringing the asset back to the original state. These 3 costs, very, very important. So from this question now, you can see that we don't have the future dismantling cost, but we have direct costs, and then we have what we call lease payment. It is this lease payment that we will use to determine the lease liability. So your first step under the right of use of asset determination, the first steps under the right of use of asset determination is to determine the lease liability. Determining the lease liability. And how do you do it? It is just like when you are doing your cash flow projection. You want to determine what we call the present value of the asset. So it's as simple as this. This is how to do it. Determine what's the lease liability when the lease payment is in arrears. So let's start with arrears. If the lease payment is in arrears, this is how to do it. You write out discount factor, present value. Then under the year, we have year 1 to 5. We have the cash flows. So the cash flows, we have 100,000 and 40,000. Somebody will ask me, where is this 40,000 coming from? Now let me begin. We have the contract will be 5 years, and that's why we have year 1 to 5. Lease payment per year is 100,000. Lease payment per year is 100,000. The discount factor is at 8%. We were told that the interest rate implicit is what? 8%. This 8% is what we use to discount the lease, the future cash flow into today's present value. This 8% is also what we use when we get to lease liability. Now, let's just focus on the right of use asset tonight. And then if we have our class tomorrow, we do the lease liability. Under these lease assets, we are determining the lease liability. What we are doing now is to measure first the lease asset. And that, I told you, the lease asset is known and called right of use asset. And for you to determine your right of use asset, it comprises the lease liability, direct cost less incentive, and the cost of dismantling if it is available. In the question we are treating under Gano C do not have future dismantling cost, but rather it has a lease payment that was made in arrears and in advance, and then direct costs, and then I think there was no incentives. There was no incentives in this question. I think I'm certain, yes. There was no incentives in the question. We have only the direct cost. So we are determining the lease liability as it were. So we have under the year 1 to 5, cash flow is 100,000, and we have our, this is 3.993 is we use the annuity formula, and your annuity formula is always let me put it here where you can see it. Your annuity formula is 1 plus 1 plus, I hope this thing will take it to, I don't know, 1 plus R, close bracket, where is raised to power now? Raised to power, okay, raised to power n, all of these divided by R. I hope we are still together. All of this divided by R. This is your annuity formula. If you cannot use this, just do it one each year after the other. So I think it will be better if we even do it one after the other. Because some students used to get confused with using this annuity formula, or they may not even remember it. If you are doing it one after the other, the formula is simple. You just do 1 plus R, 1 plus R into bracket raised to power minus n to power, or raised to power n as it were. Well, let's do it the simplest way. Apologies please. So raised to power minus n. So if you have your calculator with you, let's do for year 1 together. I'm sure you have done okay, I'm sure some of you that are in PM or SFM class, you will have been hearing about this discount factor of 18. So please, if you are with your calculator, let's do it together. We do year 1, we do year 2, we do year 3, do year 4, and do year 5. Oh yeah, please give me values. I don't have a calculator with me. So let's make this to be year 1 now. The cash flow is 100,000. Please, are we still together? Cash flow is 100,000. So this is what we will do now for your calculation. It will now be 1 plus 0.08, that is the 8%, raised to power minus 1 for year 1. Please, if you have gotten it, let me know. Are we together, please? Class, I want you to do this for me. Let's do it together.
0.925. 0.926 approximately.
0.926 approximately. Okay? I hope we all know how she got that 0.926. 0.926. Okay, year 2. 100,000 is also the value. 100,000. Oh yeah. What is year 2?
0.857.
0.857. Please, if you don't know how she got it, let me know. 0.857. You know you don't know how she got the answer. Okay. Now, this is how she got it. Look at what I just wrote. Look at the formula that I wrote down now. 1. Look at that formula that I just wrote now. I hope you are seeing it. This 1.08. Now, R stands for the interest rate. N stands for the number of years. I'm sure you have your calculator. Don't use phone. No, if you know there are, if you know you want to pass, I can get serious. Go and buy a calculator. If you don't have calculator, don't come to my class. You must buy and use calculator. It's very, very important. So now, year 1 is 1 plus 0.08 raised to power minus 1. It will give you this discount factor of 0.296. For year 2, it will be 1 plus 0.08. For year 2, it will be 0.08 raised to power minus 2. Are you getting it now? Omo Jolade, I hope I'm correct.
Yes, sir.
You are getting it?
Yes, sir.
Oh yeah, you are the one that will give me your 3 no. Omo Jolade, if you do not give it to me, we are not going anywhere. Oh yeah, give me your 3. You did not give me your 3, we are not going any further.
.794 or 0.79.
Okay. Just hold on. So year 3 now. We are going to have year 3. Our year 3 is the cash flow is 100,000. And we say 0. What, please? Year 3, Oya Omojolade,
0.794.
794. Please, is she correct?
Yes.
Thank you very much. Sandbox. Oh yeah, your question. You are raising your hand. You have lowered it. Joy, you want to speak?
No, sir.
Sorry, sir, I not get it.
Sandbox, Mavis, the two of you are not getting it.
No, I'm getting it, sir. I just wanted to chip in something. I think for discount factor, there is also a shortcut on how to calculate it instead of going through this way.
You know that we have people that are not all that vast. So let's just go through it this simplest way. We are also still going to use it when we are still going to use it. You understand that simplest way? So don't bother much, yeah?
Okay,
we are
sir.
still going to use the shortcut. Mavis, go ahead, ask your question.
No, I'm not asking a question. I just wanted to say
So chip it
there is
in.
also
Okay.
a shortcut to calculate this discount factor, which is far simpler and shorter than this
that is
longer way we
using
are going.
that is using annuity, right?
No, for discount factor, not annuity.
That you will use the annuity. That's what I'm saying now.
Yes.
Thank you. Well, we will still use it here. Don't worry.
Okay, sir.
All right. So, was Michael? Do you get it now?
No, sir.
Okay. This is how to do it.
No, sir. Not get it.
So now, this is how to do it. This is the formula. 1 plus 0.08 raised to power minus 4. We are doing year 4 now. It is you that will do it too. So please, oh yeah, you have your calculator with you. Oh yeah, now some boss, you have your calculator with you. Oh yeah, let's go.
Yes, sir.
Oh yeah, 1 plus 0.08 will give you what?
1.08.
Now, that answer that you have, raise it to, you know how to raise it. You know you have to raise it in your calculator.
Yes.
Oh yeah, raise it to power minus 4.
Okay.
What do you have?
0.74.
74 what?
That is 0.735. Approximately to 0.7.
Just always do it to the nearest three figures.
Okay.
Oh yeah, you have given us year
thank
4 now. You'll be the one to give us year 5. Oh yeah.
Okay.
I don't understand his language, so I have to mute him. So someone else should help us with year 5.
0.680. 0.681.
0.681. 0.681. You see? For this year 5, they said there will be a residual value. Is that not so? Are we still together? In the question, we were told that in year 5 there will be what? Residual value. Of how much? Let's go back to the question. Ganusi Limited must also guarantee the residual value of the asset at the end of the lease term to be 40,000. Is that also? Are you seeing it?
Yes, sir.
Yes, sir.
And they said the lease period is for how many years?
5.
5 years. Meaning that there will be a residual value of 40,000. So meaning at our year 5 we are going to have 2 year 5. One for 40,000, one for 100,000. Do we still need to get another discount factor for year 5? The answer is no. We have already gotten for year 5, 681.
81.
Thank you. So now you are going to multiply all of these variables by their item of cash flow. So what do we have for year 1? What will be the present value for year 1?
92,600.
I'm coming, please. 1 minute. This is discount factor. Then your present value PV. So under, you said 92,600. That's correct. Oh, sorry. Just be doing it. The year 2 will be what?
85,700.
85,700. Then year 3 will be what?
79,400.
Okay. 85,700. Year 3. I hope we are all getting it. These are examinable
No, sir.
questions. You are not getting it.
Yes.
Now, for us to get our
Yes, sir.
present value, we are going to multiply the cash flow by the discount factor that we get, and it will give us the present value. Year 1 now we have 100,000 for the cash flow, and then the discount factor that we got is 0.926. 0.926 multiplied by 100,000 will give us 92,600. The simple meaning is that we are saying that the 100,000 that we are going to pay at the end of the year, as of today, the value is 92,600. Is that clear?
Yes, sir.
Do you understand how we got it now?
Yes.
Well, yeah, give me year 3. What will be year 3 now?
76,400.
Year 3.
76.
79,400. This is 0.794.
Sir. Oh, yes.
So what will be for year 4?
73,500.
73,500. And then our year 5 will be what?
68,100.
68,100. Thank you. And then the 40,000 residual value will be what?
27,240.
27,240. So when we total all of this, what do we have? When you total all the present value put together, 27,240, 68,100, 73,500, 79,400, and all that, what do we have?
$425,450.
426
$540.
426,540. So that is what we have. We did it one after the other. Now let's assume that because in exam time, when you are in exam mode, you don't have all the whole time in the world to be doing this in 111. And so just like my friend suggested, he said there are other shortcuts that you can use. That shortcut is known as annuity formula. Using annuity. If you use annuity, we are going to get this for year 1 to 5. Year 1 to 5. The cash flow is the same thing per year. 100,000, 100,000. If you use your annuity, you are going to get what we have, 3.993. And I told you the formula for annuity is 1 plus 1 into brackets, into 1 plus open bracket, close bracket, sorry, 1 minute please. I'm trying to see if we can still solve a question this night. So annuity formula is 1 plus let me write it out. 1 plus I think I wrote it top there. 1 plus r raised to power this one should be 1 minus, not plus. Yes, raised to power n, all of them divided by r. This is the annuity formula. So let's key it in and find out if we are right or wrong. Are we still together?
Yeah.
Oh yeah, let's go. 1 minus 1 plus 0.08 close bracket raised to power minus 5. All of these divided by r divided by 0.08. What will it give to us? Oh yeah, everybody punch your calculator. Are we all still together? Don't sleep, oh.
Yes. Give us 3.99.
Okay, Isaiah, thank you. Marvis, oh yeah, Ahmed, do your own, Ahmed. Oh, you are
Yes,
just joining.
give us 3.993.
Thank you so much. So this is the shortest way to do it. All those long turechi, you 1, 2, 3, 4, 5, it becomes an issue. Do you understand now? Are we still together?
Yes, sir.
Okay. So now, if you year 5 will not go with this annuity, this residual value, you will not use the annuity because it's year 5 estimation. That one will happen in year 5. This other one will happen year by year. Another one will come year by year. That's why we did we can do it in annuity. However, let me also state this, that the lease payment can be adjusted. You can have what we call variable lease payment being added to the fixed payment. I was explaining when we were looking at it the other time, the types of lease payment that we have. We said we have fixed lease payment, we have variable lease payment. Now, in this question, Ganusi have agreed with Afar PSC that they are going to be paying 100,000 every month. Is that not so? Now, variable lease payment can come in play. How? Then I say maybe there is a clause I did not have that said that if Ganusi Limited makes 1 million naira profit, 10% of that profit will come to Afar PSC in year 5, or let's say in year 4. Let me use year 4. It means that we are going to have what we call a variable lease payment. In other words, if you are paying 100,000 year 1, 2, and 3, it means that in year 4, if you are making that profit, it means that your lease payment will increase from 100,000 to 110,000, because 110,000. Sorry, 200,000, because 10% of 1 million is 100,000, meaning your lease payment will increase from 100,000 to 200,000. Once this happens, you should know that you cannot use annuity again. You have to be getting your present value, using it, evaluating it on year-to-year basis. Is that clear? Is it clear?
Can you recap?
Let me recap. If your lease payment is static, is fixed, that there are no changes, you can use the annuity formula, so it will be more faster. But once there is a change, there are changes. Maybe year 1, 2, and 3, you are expected to pay a fixed payment of 100,000. Year 3, it increases to 200,000. You can't use annuity for year 4 and year 5. You can use annuity for year 1, 2, 3, but you can't use it for year 4 and year 5. That's what I'm trying to explain. So it is not in all cases that you can use annuity. That's what I'm saying in a short note. Is it clear?
Yes, sir.
Thank you. So we have gotten our lease liability if the payment were to be made in arrears. Now, let's also determine our lease liability if payment is made in advance. If lease payment is made in advance, how do you determine your lease liability? Let's quickly run through it before we call it a night. What I was trying to explain it is like you people were not getting what I was trying to say. Once your lease payment is made in advance, I told us earlier, who can explain to me what do we do, what we should do? Can anybody try? If the lease payment is made in advance, what do we do? How do we get our lease liability?
So
Anybody
we use
try?
the discount we use the discount factor for the number of years that cash has not been received for.
Thank you. Please let me clap for Vivian. Thank you so much. I give you 3 marks. Take your 3 marks. You are looking for 47 to pass now.
Thank you, sir.
So the numbers of years that you have not received the cash flow, that is the only one you are going to discount, and that's what we are doing now. So we are going to still use our annuity. Oh yeah, let me punch your calculator. What do we have? Give me figure. Give me figure. Give me figure. Give me figure. Who can give me the formula? Who can give me the formula?
1 minus
1 minus
Go ahead.
1 plus 0.08 raised to power minus 4 all over R.
What is
Over
R?
0.08.
Thank you. Only you just want to collect the whole mark. I give you another 1 mark now.
I receive it, sir. Thank you.
We receiving it too. Oh yeah. Give me figure. Give me figure.
$3.312.
Is it correct? 312.
Yes.
Sandboss, do you understand how we got 3.312? So what will be our year 5 value now? The discount factor for year 5 is what?
$0.681.
0.681. Thank you so much. Do you know how we got 0.681, everybody? So what will be our present value for
Yes.
100,000? Oh yeah, the present value now is what?
331,200.
200. Thank you. What will be our for year 5?
27,240.
27,240. Any question? Anybody with any question? So yeah, what is the total?
689,640.
3
I've done the wrong thing.
8
358 440.
440. Thank you. You can see that that 4 years now, you can see that the lease liability have reduced. Is that not so? Because payment was made in advance. Why I'm taking my time is this. You can be asking your question that the lease payment was made at the beginning of the year. They may not tell you it was made in advance. And they can tell you that the lease payment was made at the end of the year. If it is made at the beginning of the year, you will only consider the number of years that cash have not been paid to do your evaluation, to get your lease liability. Is that taken? And if it is in arrears, you use those numbers of years that the contract was entered to do your lease, to determine your lease liability. I hope it is clear enough. Are we still together?
Yes, sir.
All right.
Yes, sir.
Now that we have determined our lease liability, so let's determine our initial right of use of assets. Our initial right of use of assets. Remember, I told you the composition of the right of use of assets is lease liability. Now, this is we are doing arrears when lease payment was made in arrear. Yeah, lease payment was made in arrears. You can see. So we are determining our initial right of use of assets when this liability was made in arrears. So the first thing first that will come is the lease liability itself. Had direct cost to it. We don't have incentives. Assuming we have incentives, we remove incentives. And then we don't have cost of dismantling. Assuming we have it also, we will put it there. But since we don't have it, I'm just putting it so for your seeing sake. This is how you do it. And then this total here is the total. This is known as the right of use of assets. Right of use assets. Is it clear now? Are we still together?
Yes.
Thank you. So how are we going to treat it? We are still under an arrears accounting treatment. This is the accounting treatment. Very simple. Right of use of assets. We debit the right of use of assets. We credit liability. Then for the cash, we also credit cash, so that we can have our right of use of assets. This is how to do the accounting treatment. You know that it's an asset, so definitely it will have a debit variable. So you debit your right of use of asset, credit liability. That direct cost, you have to credit cash because you pay it from your hand. Assuming there's an incentive, we're going to debit incentives. Or instead of doing it, you just remove it from the cash. You remove it, deduct it, and to put it here. That is that. Then the third step is to determine the subsequent measurement. How do you do it? All that you need is just to get your depreciation, remove your depreciation value, and then from there, from that depreciation value, when you get your depreciation value, you remove it from that right of use of asset, and then you have the net book value as it were, or the current amount of the asset as it were. So this is how simple you are to treat your lease. It's a very simple standard, but if you don't know it, you don't know it. Are we still together? So this is how to do it. We have done the initial measurement. The initial measurement of the right of use of asset is 431,494. And then the subsequent measurement, which is also the second year and above measurement. How to just do it is, we were told that the asset is the contract is for 5 years. So the total amount of the contract, the total amount of my right of use of asset that we have gotten is 431,494. We remove the residual value from it. Then we have 391. The number of the useful year of the contract, or the number of that is years, or let's say the lease period. The lease period is 5 years. The lease period is 5 years. Our depreciation is 78,299. So that is it. It's as simple as this. It's not something that is difficult, please. Are we still together, please? Any question? As we call it a night this night. So tomorrow hopefully we are going to meet by I won't be available tomorrow. I have an engagement by 4. And I have a management meeting by 8. So we won't be available by tomorrow. But subsequently, the next class we are going to have, we are going to look at how to measure the lease liability. Please, this thing is very, very simple. Don't let anybody confuse. I took my time to go through it this way to make it seamless for you. All that you need is to go and practice. Look for questions that treat right of use of asset. And if you have questions, go to that WhatsApp platform. The one that I used to send the link is my WhatsApp number. Just private chat me. I will always attend to you. Don't call me. Private chat me or send a voice note. I will always attend to you. This thing is very, very simple. Just do it this way that I've taken you through it. I try to break it down and use a layman language. I don't want to use technical language so that you can understand it. If you have questions, just let me know and we'll do everything together. Any question, please, before we call it a night?
Please, sir, how can we get the material?
Well, just at the end of this class now, we'll tell you the whole details as to how to get this material. Just hold on. You see it on the WhatsApp platform. Any question, please? I'm sure you have added value tonight. I'm sure my time was not wasted in any way. Thank you.
Not at all. Your time was not wasted. It was useful, productive. Thank you.
Yes, sir.
All right.
Very productive. Thank you for the class, sir.
Thank you so much, too.
Thank you,
So,
sir.
we are going to see in the next class, please.
Thank
I
you very
beg of
much,
you.
sir. Have a good night rest.
And you too, please, I beg you. You want to pass ICANN, solve questions. Look for questions, solve it. If you on your own, what we have done tonight, carry it, solve
Okay,
it.
sir. Okay, sir. Thank you very much. Good night.
All right, good night. In the next class, we are going to look at lease liability. Have a very wonderful night rest. Thank you so much for your time.